Good morning, everybody. Joe Chacho here. Happy Thursday. Today we're going to talk about term versus whole life, which you should offer to your client, what is best. Yeah, before I go into that I want to go over something that is kind of like things come in like waves in the office where agents have got issues getting into the front door, where to stand. So I'm not going to go into a lot of detail on where to stand and where to sit when you go inside. Just want to go over two things to get you inside the door so you know how to talk about term and you know how to talk about whole life. What ends up happening is that you call a client up, they don't answer the phone, or they do answer the phone and they don't remember sending the card in. You're very short, and then you want to go there and knock on them. And then they're giving you a little bit of hesitation. Why didn't you call me before you came? So I'm going to give you a couple of things to think about. First, the things you want to do, you want to apologize. Say, I'm sorry for stopping by unannounced. Usually, I like to call and make an appointment, yet we've tried and either you haven't answered the phone or we were unable to get a hold of somebody, so I wanted to come by and deliver the free information you requested, number one. Number two, you can talk about how you were visiting with a client around the corner. You were unable to get a hold of them, so you wanted to stop by to maybe see if they were home, to hopefully visit with them. If not, you can maybe make an appointment with them to come back at a later time. Number three, issues that have been happening is that when they go to the door, us as agents, the clients don't remember sending the card in. They sit and say, I don't remember sending that card in. I sent it in a long time ago. And what happens as agents, you get discouraged. You think it's an old lead. You think you're overcharged. You think the client knows what they're talking about. And what ends up happening is that the client remembers sending the card in. So what I would recommend you to do is take a couple steps back when you're in the house. When you're outside the house. You may be a little too close. You may be intimidating them a little bit. Take a couple steps back and say, I wouldn't have expected you to have answered any differently, yet most people tend to forget sending the card in. May I hand you the card to where you can look at it? When they say yes, your card will already be highlighted depending on the leads you have. It says life insurance, final expense, burial coverage, burial insurance. You have all that stuff highlighted. The words how to qualify. You're going to hand them the entire pack of leads. Ask them, may I hand you the card? They say yes. You hand it to them, and then you move back. Give them time to sit and look at it. Let them relax. Don't let them feel intimidated that you want to push in the door, because people don't hear good things on TV or the news. They hear about bad things. So take a step back, talk a little slower, and just try to relax a little bit. Let them look at it. They're going to sit and tell you, yes, there's my handwriting, but I don't remember sending that in. The form we talked about called additional coverages that I'm going to recommend you guys, if this is my leads, I'm going to recommend you to put this on the back of your leads like this here. So you got your leads on one side, and you got this paper here. So you hand in the paper to the people like this here, and they're going to tell, I don't remember what the card is about. Say, no problem, I understand. On the card that we send to you, the part you sent back is this one here, yet the part that you zip off is, you should maybe still have it, but you may not. But on the card, it had these things here. So tell them to flip your leads over, and it's going to tell them all the things you do. Term insurance, final expense, burial, cremation, Medicare Advantage, a child plan, a grandchild plan, an accidental, all the stuff you do. Now, to get this paper, you go to your Dropbox. Jay, Heather, or Brian will send you two attachments. One is that state-specific for the state you live in that has all the applications in there, all the RX that you need. And then you got what we call is the back office. In the back office, you're going to hit that, load it all up. Then you're going to go to Featured on Workshop Calls. When you see Featured on Workshop Calls, then you're going to see other coverages available, and this is going to bring this up. Now, on my computer, I have it done to where I see the little, the actual thumbnails in there. So you can have it listed of all the different things in the categories, or you can have the thumbnails. It's going to tell you view as small, large, or list. So my thought is to where you can kind of see what you're looking for instead of just words in a list. I may recommend you to put view as large thumbnails are going to come up, and you're actually going to see this paper here. Then you'll be able to print it out. Okay, let's talk about term versus whole life. Before I get started on what you should sell, what you should offer, if you go to a client's house and the client tells you he wants to buy a term product, please don't try to convince him to buy a whole life because you think he should have one. Because the possibility of you making a sale will be lowered greatly. Okay? Now, let me give you a couple examples of what has happened to me in the past. And what it does is that the longer you've been in the business, you're going to see and experience situations to where you're going to hopefully take the client down the road you want them to. Yet what happens a lot of times is that they've already spoke to a friend, a neighbor, another insurance agent who has told them they should go with a UL, an IUL, a term with return of premium, a whole life. So they've been educated, yet they probably don't remember everything that they were told about, what they discussed. So if they tell you they want a term, my thoughts are I wouldn't try to change their mind because you're probably not going to make a deal. Roland agent years and years ago went into the house, did not ask the client what he'd had before, what he was wanted, what he was looking for. He did not do his homework to extract information out of the client, because what happens, we go in there, tunnel vision, final expense, permanent coverage, because that's primarily what final expense is for. Yeah, when you talk to a younger person, they may not want a 10,000 whole life program when they're 57 years old. They got like maybe another 20, 30 years to live, and they're going to sit and say, my God, by then the premiums are going to be the same, yet it may not be enough. The premiums are too much now. I don't care about cash value. So every situation you got to sit and look at is differently. So the client said no. He offered them a carrier whole life. It was $5,000 for, I think it was $40 a month. No. So, Joe, is there anything you want to ask? And I told the guy, what did you have before? He said, I had a term. What type of term did you have? He said, I had a 10-year term. I said, is that what you want now? He goes, yes. I said, so in other words, what he was showing you, the $5,000 for 40, you don't see the value in that. What you want is a larger term product with a 10-year life. That's what I want. So I said, well, there's some additional questions I need to ask you. We've got a program that's a term 10. And he ended up buying a term 10, and it had a $25,000 face amount for $5 more. So he went from $5,000 face amount at 40 premium to a $25,000 face with a $45 premium, $5 more for 10 years. That's what he wanted. So I get in the car with the agent, and the agent says, why'd you sell him that? That's what he wanted, okay? Because if you don't offer it, you don't sell it, you don't discuss it, you may not get nothing. So you have to go into a house, and you got to do fact-finding. What were you looking for? What have you heard about? What have you checked into before? Have you got anything by the mail? All these things, you got to be a nosy neighbor. You got to be a doggone detective asking questions. You got to be an attorney drilling them to extract all this information to where you can put all this stuff into a blender and you know where to take the client down that road of success for you. Years ago, I went to see a client, and he was 47, 48 years old, and he wanted a $250,000 whole life plan. And he wanted it. He qualified for it. He said, Joe, money's really not an object, but yet I don't want to spend too much money. So all I'm thinking is cha-ching, cha-ching, cha-ching. $250,000 is going to be some huge premiums. I said, this is going to be a fantastic home run I hit today. So we start talking, call up the carrier, because back then we didn't have the little shortcut apparatuses, and called the carrier up, and they said the premium was going to be, I don't remember what it was going to be something way more than what he wanted to spend. He said, Joe, that's what I want. He said, you don't have a cheaper company. I said, well, I could probably shop it around for you, but I said, even if I come down to $100 or $150, is that going to make it worthwhile for you to want to spend that exuberant amount of money? He goes, no, it's too much money. So I said, listen, why don't we talk about this here? I knew his health. He was on no medications. The guy was in perfect health. I said, why don't I design you a program that will last you all the way to the time you pass away and get you a big chunk in case something happens to you now for the next 30 years. So what I did, And right now my memory does not remember exactly what carrier I put him with. I put him with a 30-year term, okay, and I gave him a 30-year term for $150,000, and I gave him a $100,000 UL guaranteed to age 100. So he still had the guaranteed to age 100, like a whole life program, and then he had the actual 30-year term. So I told him, I said, you've got a couple options on this term product. You're less than 50 years old. You can get it to where you can get a return of premium. So after the 30 years, you can get all your money back. It's going to cost you a little bit more. Went over that with him. And then from there, I showed him the regular straight term policy for 30 years. He chose the straight 30-year program without the return of premium. I said, that's fine. I said, this one here for the 100 is going to cover you all the way, take care of your final expenses, everything. And I said, your house mortgage is for 30 years. You just bought it 2 years ago. I said, you got 28 years left on it. So in the event something happens, I said, your mortgage is paid for, because he had a small house back then. And I said, I think you're making a good decision. But I said, before we, close the deal, I believe it was like $47 a month more to get the return of premium, $47 or $57 a month more to get the return of premium. I said, to me, it's kind of like we can't use the word as is it an investment, but I said, you're kind of putting a little bit extra money into it with the hope that you live 30 years and get all your money back. His thought process was, Joe, if I don't live 30 years, I'm losing $600 a year that I can use that money to pay off bills. I said, fine. Ended up writing him up the $100,000 universal life, guaranteed age 100, $150,000 term. They came out there and they did the paramed on him. He was the happiest guy in the whole world. That comes with doing this for a while, listening to these calls here, networking with your friends, writing with agents, speaking to your manager, calling the carrier up to find out what's available. Now, when should you use a whole life? When should you use a term product when it comes to a client? A lot of that has to do when you're speaking with the client. You need to find out, do you want a permanent policy or do you want a term policy? And what that's going to lead you into is hopefully a discussion to where you can educate them on the difference. Some clients I do that, and some clients I don't. What I like to find out is if a client has bought something by mail, AARP, Globe, there's probably a couple other out there who mail to our clients who have a 5-year renewable term. Some of them go away at age 80. Some you can convert before that age into a permanent policy. So if they already have a term policy, you need to educate them how it works, explain to them that it's going to go up in 5-year increments. It's not based on 5 years when they bought it. It's an age band, and it goes up. Okay? On the policy, it will tell you whether it goes away or if it's convertible. So you need to find out what they have, what they want, and what they can afford. What I look at is if I go see somebody that's 65 years old or higher, you can get them a 10, a 15. Some carriers even have a 20-year term available, but yet sometimes that term sometimes starts at $100,000. It depends on the company. So you got to figure out the company, what the client wants. When you visit with a client that's 65 years old, I like to find out, how old are your parents? If they sit and say, well, my father lived to be 87, my mother lived to be 92, 65 and 20 is 85, so they have longevity in their family, especially if they're in good health. So would you be doing a wrong thing by offering them and them buying a 20-year term from you, knowing their parents lasted to 87 and in their 90s? No. If that's what they wanted, that's what you give them. I wouldn't lead with that there unless they're giving me some type of hesitation. I want to think about it. Now you maybe want to revisit a term policy and maybe say, this is how a whole life program works, which is a permanent policy guaranteed you to age 121. I said, do you want me to show you what the premiums are on a term policy for 20 years? Understanding that's going to be more underwriting. They're going to look back a little bit further. You got to know this here. Heart attack, stroke, medication. So in a term policy compared to a simplified issue policy, the term has more underwriting questions to ask, and it goes back further on application questions. Some of the stuff we have now, we got cancer, 2-year look back, heart attack, stroke, 2-year look back. With some carriers, it's 5 years, 7 years, 10 years. So you got to know the client's health, and you got to know the carrier. So my thoughts, when I'm with a client, I want to ask them, what are you looking for? What have you had before? What do you want? And most of the time, the people really don't know what they need and what they want. So they're looking to us to guide them on what they want to do. Depending on their health, depending on their income, has a lot of variables on what you should offer them. If you got a client that only makes, let's say, $800 a month, you don't want to offer them a 25-year term because the premium may be too high for them. Okay, they maybe only would want a 7, 8, 10, 12,000 whole life, lower face, lower premium. Everything is guaranteed. They got a cash value, so if they miss their payment, the cash value will make their monthly payment. Whereas a term, they miss it for 2 months, they basically lose it unless they go back in to pay all the actual back premiums that are due. A whole life is guaranteed. Most carriers now are guaranteed to age 121. Premium payments are made to age 121. There's a cash value that grows in the policy. Cash value grows a little bit slower as they get older because the cost of insurance increases as they get older. So what that does, that takes away from the funds that are going into the cash value, so the cash value grows a little bit slower. The policy's worth $5,000. Years ago, used to endow, which equaled the $5,000, equaled the cash value, equaled the face amount, age 95, age 100. Now it's age 121, okay? So they're rarely ever going to hit the cash value maximum unless they live to be 121 years old. The possibility of them overfunding it by making payments to go past their face amount, that could happen because of the age they are, or if they're a smoker, or their health is not good. They maybe have a graded or modified or a guaranteed plan. Some clients use that as an excuse to where I don't want this program here because I'm going to be spending more money and I'm going to be living longer. And it's kind of hard to sit, good morning, it's kind of hard to sit and argue with a client like that there. You need to kind of say, you know something, ma'am, I've got no guarantee when you or I are going to go. What I will guarantee you, let's say in 4 years from now, if something happens to you, you would have contributed a small amount of money, and you're going to be removing the burden from your family on this program here, whether it's a term or whole life or UL. A whole life is usually a more suitable program for the clients we deal with in the final expense market. They're looking for a permanent policy that's got guarantees. Rates are guaranteed level, face amount is level. They got a cash value that grows that they can use in the event of an emergency. If they just want to borrow the money to put tires on their car, they miss a payment, okay? They can have as many beneficiaries as they want, and they can never be canceled, and it's theirs for life. So if their health changes, it does not matter. If your health changes, no matter if you buy a UL, an IUL, a term, or a whole life, once you have it, it's based on your health, and nothing can change, nothing can take it away. The only way to lose a program is that if the client doesn't make their premium payments. Now, if you go to a client's house and they're 50 years old, 55, 57, even 60 years old, I like to lead with, what have you had before? What are you looking for? What I do, I'm kind of like throwing out some thoughts. What are you looking for? You're looking for a little program for $10,000? Yeah, that's all I need, Joe, is $10,000. So you got to sit and think, do I want to just move forward on the $10,000 program, or do I want to take a step back and say, why don't you let me get you a $25,000 term 20 or term 30, depending on their age, that will last you forever, and you got higher premiums? A lot of times we can tend to over-educate clients. There's a lot of stuff up here we know on the mechanics of these different programs, and what ends up happening is the client has their heart set, their mindset on a certain premium they want to spend. and they're happy with that 10 or 12,000, spend the $50. They're happy with that there. Okay, they may want more, but yet they can't afford it. Now, when you come to them and you tell them, I've got a $25,000 program, so it'll last you for 20 years, 15 years, whatever it is, and your premium payments are going to be $72 a month. Now they're doing the math. 10,000 for 50, 25 for 72. They see the value of the 25,000 is better on a dollar basis, yet they can't afford it. So now what you could have done is lost the entire sale, for the mere fact is that you're giving too much information out. I like to ask, as I've said, what have you had? What are you looking for? What are your needs? What can you afford? What are you looking to accomplish today? And a lot of that today can be figured out on what they had before. Now, when it comes to a term product, they've made it so much simpler for us to do these things here. Like Royal Neighbors has a e-app with an approval minimum face of 50, and the maximum amounts are different by ages. So you need to look that up, and it'll tell you all the different age variables for the actual maximum amounts you can do on the non-med on the e-app. Sagicors, we had a call on them Monday, so I know that off the top of my head, is 25,000 to up to $1 million. Then it's 25,000 to 750. Then it's up to 500,000 based on their age. You get an approval right there on your computer. Assurity has one as well. It goes up to, depending on the age, get it right there approved. And some carriers, 99.9, you're going to get it approved right on the e-app, yet sometimes it's referred to underwriting because there may be a little itty-bitty snag that they need to find out about. Other carriers we have, you do it on the e-app, but yet you need to submit the e-app to the office, and then they'll give you the answer for it. Liberty Bankers, one of our carriers, does not have term anymore. Okay. Now, I've got over here two carriers off the top of my head that I know have the return of premium. Okay, the return of premium with Mutual, they have one for 20 and 30 years. Again, it's age banded, and then also Assurity has one. They have a 20 and 30 year return of premium as well. So depending on the client, depending on how you talk to them, depending on what their desires are, I've sold probably, in my 21 years, probably 4 or 5, maybe 6 return premiums on term products. Okay, the premiums on the ROP term are higher, and what a return of premium on term means, it's not like a whole life, is different. A client buys a 30-year term with return of premium. They live the full 30 years. At the end of the 30 years, they're going to get back all the premiums they paid in, and most carriers will pay it all back minus the annual policy fee. They get all their money back, no questions asked. If they die within that 30 years, they're still going to get the face amount that they had, yet they've made payments a little bit higher because they elected for the rider of the return of premium. Okay? Now, on a whole life return of premium, it means that if you were to pass away in 2 years or 3 years, depending on the company, from the date that you started it and you pass away due to natural causes, they're going to return the premiums to the beneficiary. You got a 2-year waiting period, you got a 3-year waiting period. You got to live that period of time to get the full amount of the face. If you don't live that amount, they're going to get back all of your premiums will be sent to your beneficiary. Now, there's one carrier we have that came out with a kind of a sexy program. I don't have all the underwriting questions here with me. And it's Prosperity. Prosperity's got a program to where they're underwriting. They've got some knockout questions, yet the knockout questions are like oxygen. But yet if you have something that is an ailment that is not on the knockout question, they have a 3-year waiting period term. Rates are very competitive, very firm, very nice. It goes from 5,000 to 30,000. So you can get that set up, 5,000 to 30,000, ages 40 to 80 years old. And I've had a couple agents who have written it. They say it's very simple and very easy to write. I'm going to jump just 1 second into the ULs. If you have a client that you're going to visit and they want to get a whole life program, and whatever age they are, everything is based on health. Health, smoker, heart attack, stroke, everything in life insurance is based on health because they're protecting you based on your health. Once a client buys a life insurance policy from a carrier, they become a liability. So the insurance company says, Joe, we want to make sure that our liability is going to last a long time, so the money that the client pays in every month, we can invest it in either a bond, or we can invest it in some type of vehicle to where we can get back most of our money, so when that client dies, we've got the money set off to the side, okay? Let's say you go to a client's house, and they're kind of unsure what they want. They kind of want a 30-year term. They want a 15-year term. They want a 20-year term. They want a whole life, but the premium's a little bit too high. And they say, Joe, I want a policy for $25,000. You found out they've never had a term. They've had a couple whole lives in the meantime. They're 60 years old, good health. They're maybe on a high blood pressure medication. You can put them with any carrier we have, term, UL, whole life, no matter what. They qualify for the best. So they say, Joe, I want a $35,000 whole life plan. So you get excited. You bring a little rate calculator, and you go, okay, Company A is $100. Company B is $102. Company 3 is $107. So you look at this here, and you go, okay, which one's got the best underwriting? Which one can I do online? Which am I going to get approved quicker? Which am I going to get paid quicker on? Which is the best for the client? What benefits are good for the client? So you're looking at all this stuff here, running all this stuff through your mind, and you tell the client it's going to be $100 for $35,000. And the client tells you, Joe, that's kind of expensive. You know what I'm saying? I wasn't looking to spend that much money. I just wasn't looking to spend that much money. So now you try to do, well, it's only going to be like, $3.25 a day, going to get you $35,000 worth of coverage. We got a cash value built in there. Premiums are level, face is level. I said, no, Joe, I kind of want to, no, I don't want to spend that much money. I want to think about it. So when a client tells you they want to think about it, it's usually money, okay? It's not because they got to think about it for anything other reason. It's usually money. Now, what I like to do is take a step back and say, what if I was to design you a program that will get you more coverage, maybe for a lesser premium, yet I need to ask you some more questions. You already know the questions that you're going to ask already know. So you're going to tell them, I've got this new carrier that we've had for a while. The rates are a little bit lower. Let me kind of plug them into my little calculator here to find out what it will be. You go to the rate calculator we have. You change it from a level benefit. Hit the little drop button. You go down to SIWL or traditional. You put in your $35,000, $25,000, whatever they want. You bring it up. Foresters will pop up. Other carriers will pop up. You're probably going to get Sagicor is going to pop up, which is a no-lapse universal life, guaranteed to age 100 with premiums paid. After age 100, no premiums to age 120, okay? Done on your iPad. It's simple, quick, and easy, okay? Now, which one should you use? The one the client wants to buy. Joe, I'd rather do a whole life, Joe, because I make a little bit more commission than I do on that product or a term. I'd rather do that there. My philosophy is, I was told a long time ago, part of a pie is better than no pie at all. When I go into a house, I want to walk out with a sale. I don't care if it's a huge sale, a medium sale, or a small sale. I want to walk out with something. The reason I do is going to pay some of my expenses. It's going to make me feel good. It's going to energize me. It's going to motivate me. It's going to get me going to where now I've got some mojo juice in me because I made a sale. If I can make a sale every day, I'm out for just $10, my first or second door knock. If I can make a sale for just $10, not the premium amount, not the commission amount, not the money I'm putting in my checking account, it's the sale I'm putting in my briefcase. It gives you that warm feeling. It gives you that Mr. Macho feeling that you got what it takes, okay? So go down the road, find out what the client needs, what they want, what they've had before, what they've discussed before. If another agent has been there, you can do all that in your warm-up with them to find out what they are. Secondly, you got to find out about their health. Their health dictates what they can get. You've run across clients before that want to buy something, yet they don't qualify for it because of their health. I want immediate benefits, Joe. That's all I want to buy. When a client asks me that or tells me that there, I'm saying to myself, they had to have talked to somebody else. They probably applied for immediate, and they got something other than applied for. So now you need to do a little bit more digging with that client. Find out what they had, find out what they want, find out about their health, find out what they qualify again for, find out what they can afford. So with that said, I'm going to end it there. Does anybody have any questions on what they would like to ask or say? If you do, do me a *2, and Jay will open you up. Who's that? Okay. Nobody wants to talk today. So, okay, guys, nobody wants to chit-chat. We'll see you on the call tomorrow. Make it a great day. You got any questions, get with your manager, get with me. When you're in a situation and you're unsure what the client really needs, what they really want, say, you know something, let me call up my manager, let me call up my supervisor to check with him to see if there's something I may have missed, something I may have overlooked that I can help you with. Do that. Put the client on speakerphone and let me help you out. Make it a great day. Appreciate your hard work. Hit them hard, guys. Bye-bye.